Most traders don't fail because of losses. They fail because they can't handle winning. That sounds backwards, right? But think about it. You finally pass your challenge. You finally hit that reward. And instead of feeling free, you suddenly feel the weight. You feel the pressure, the fear of losing it all. Success doesn't just bring rewards. It brings responsibility, expectations, a new identity to live up to. And for many traders, that weight is way too much. Welcome to Trading Psychology series at Funding Pips. My name is Paulina and I am your trading psychology coach. And today we are giving away 2 50K challenge accounts to viewers of this episode. And to enter, you have to like the video, subscribe to our channel, and comment your biggest self-sabotage trigger below under this video. I'll pick 2 winners and announce them in next week's Thursday blog. Let's continue. We tell ourselves we're scared of losing, but more often, what we're really scared of is keeping the success, because when you succeed, everything changes. You're no longer the underdog grinding your way up. You're the person with something to lose. And your mind, your brain reacts to that pressure in dangerous ways. Overtrading to protect the high, cutting winners short because you don't want to give back to the markets, randomly breaking your rules, and once the balance feels big. And here's the paradox. Most blown accounts don't happen on the way to success. Very often they happen during the master account stage. They happen right after the master account is received. Think about it, traders. You grind through a challenge with perfect discipline. Every click is calculated. Every risk is defined. Then you pass. Suddenly, you're sitting on a 100K master account. And that's when the self-sabotage creeps in. You start overtrading because now the reward feels worth it and real. You cut trades too early because the equity curve feels fragile. You break your rules. You never would have broken in a challenge because now everything seems bigger and every pip movement feels heavy. That's why the biggest account blow-ups don't show up before success. They show up right after. Let's break down psychology behind it all. So psychologists have been studying fear of success for decades. Klenk and other researchers in 2011 showed how fear of success often drives what's called self-handicapping. That means we unconsciously create obstacles for ourselves in our brains. So if we fail, we can blame the obstacle, not our ability. In trading, that looks like sabotaging a winning streak with an oversized trade, just so you can say, well, I broke my rules, that's why I lost. Another framework comes from the researcher called Covington's self-worth theory. Back in 1976, he found that people protect their self-esteem by avoiding full effort. Because if you go all in and fail, that feels like a proof that you're not good enough. But if you hold back, you always have the excuse, well, I didn't try well enough. For traders, that shows up as never fully committing to the plan, overtrading, constantly tweaking your strategy, constantly second-guessing yourself. So you never have to face the truth of whether your edge in the markets works or it doesn't work, because you explain it to yourself, well, if I really wanted to, I would, but I'm still testing. I could be following my rules, but I'm still experimenting. And that's the performance anxiety now that kicks in. When the pressure of success gets so high, the brain tends to regress into what's called safety behaviors. You've seen this outside of trading. Athletes who choke after taking the lead, musicians who tighten up when the spotlight is on. And there is a trader who cuts their winners short because holding feels too heavy. Or who overprotects an equity high and curve to stop following the process because of that. So what does all of that tell us? That the fear of success isn't about the money. It's about identity. It's about the pressure of living up to being the successful trader. And the brain will do whatever it can to escape the pressure, even if it means sabotaging your own growth. Let me give you 3 quick stories you've probably seen or maybe lived yourself. First, trader A passes a 100K challenge. He should feel proud, but the next day he's thinking, now I need to prove I can scale this fast, I can get to the reward. So he doubles his risk on the first setup, takes a full stop loss, and then ends up in a deep drawdown. The account is probably gone. That's not strategy, that's impulse. Second, trader B builds his account to an all-time high. The balance has never looked this good. The reward would be heavy. And instead of letting the next trade breathe or not trade at all, they try to overtrade. Tiny wins, tiny losses, overtrading. And all of that is not to allow for the balance to dip. He never lets his edge to play out. That's protection. Trader C finally gets the first reward, a huge milestone, but instead of stopping to celebrate, he thinks, one big push, just one more week, and I can double it. He overtrades, stacks losses, and wipes out everything, loses the account. That's override. Now, here's the key point. These traders aren't losing because they don't know how to trade. They are losing because success triggered something deeper. The resilient trader, the consistent one, treats success not different than the failure. Win or loss, reward or challenge, they follow the same process, the same risk, the same rules, the same discipline. And that's why they survive while others spiral. They keep themselves conscious, grounded, and they focus on just the next trade. So how do you know if you're sabotaging yourself after success? Well, here's a few signals to watch out for. First, if you feel an emotional spike after winning in the markets, and sometimes that might be even stronger than the emotion after losing in the markets. That high, that rush is the start of the spiral. Second, you feel the urge to protect the high instead of just trading your plan. So you suddenly play in defense, closing your winners early or skipping setups just to keep your balance looking safe, and you want to minimize your losses. And third, you notice you only break rules when you are in profit, when you're down, when you're disciplined. But when you're up, the rules get looser and you just let it go. Those are the red flags. And if you catch yourself doing any of these, it's not random. It's fear of success creeping in and pulling you off your edge. All right, let's get practical then. Let me give you tools to stop sabotaging after success. Here are 3 drills that I want you to practice. Number 1, the pre-win reset. Before you even sit down to trade, open your journal and write one line. If I win today, I still follow my plan tomorrow. Simple but powerful. It tells your brain winning doesn't change the process. It anchors your identity to discipline, not the outcome of the day. Number 2, equity neutrality. Hide your account balance, hide your reward numbers, hide the dashboard. Why? Because once you see the equity high, your brain starts protecting it. Professionals focus on setups, risk and execution, not the number flashing on your dashboard or your MT5, where the numbers are getting to you. Number 3, the weekly anchor. Stop grading yourself day by day. That's where the pressure builds. Instead, review your stats weekly, your win rate, your average risk or losses, your average winners, your drawdown. When you zoom out, you train your brain to think like a fund manager, not a gambler on daily basis. Did I win? Did I lose? Now let's dive into the habits behind it. In the books like The Power of Habit or Atomic Habits, both show the same thing. Repetition builds identity. Every time you run these drills, you're teaching your brain that success doesn't change your process. And over time, discipline becomes automatic and sabotage loses its grip. Habits work on a simple loop: cue, routine, reward. If your current loop is see profit, panic, sabotage, you've trained your brain into the pattern that this is what you do. But by running these drills, the pre-win reset, equity, neutrality, weekly anchor, you rewriting that loop with new routines. James Clear in Atomic Habits takes it even further. He shows that every small action you repeat is a vote for your identity, vote of confidence. Each time you journal before trading, each time you hide your balance, each time you review weekly instead of daily, you cast in your votes for the identity of a disciplined trader. And the brain learns fast. So repetition wires new neural pathways. What starts as an effort eventually becomes an automated process in your brain. So instead of success triggering sabotage, success starts triggering discipline. Look, fear of success is real, and it's probably costing you more trades than you realize. But the traders who master it, they are the ones who keep winning because they know how to handle success just as well as they know how to handle losses. So here's what I want you to do. Like this video, subscribe and share your biggest sabotage trigger in the comments. And let's put it out there and start breaking the cycle together. And if you want to go deeper into rewiring your trading psychology, check out my other trading psychology series on our Funding Pips channel. That's where we break down the exact drills that build consistency for the long term. And now, if this has helped you, like, subscribe, and drop your sabotage trigger in the comments. And let's name it so we can break it. Also, I will review it and create content around it. Want proof that it's possible? Head to success stories on our channel and see exactly how other traders did it. Mindset, risk management, consistent execution. And for a weekly edge beyond patterns and indicators, watch Beyond the Chart series every Sunday. We zoom out into the context of fundamentals, and you will be able to stay grounded and see the markets for what they are. Giveaway winners will be announced next week, so no purchase necessary. See description for full details. Traders, thank you so much for being here, and I really hope you found this helpful. Funding Pips, built by traders for traders.
Where success meets psychology. In Paulina's way, strengthen your mindset every week. Success story every Wednesday. Traders who broke through their limits. Psychology session every Friday. Join now. Hit the bell. One session could change your trading forever. Funding Pips. Built by traders for traders.